Good afternoon. How are you all doing? How's everybody? All good? Afternoon, Peter, JC, Crum, Tom, Brian, afternoon, Monkey, Andres, Fletch. How are you all doing, Peter? GU is back where it was this morning. It is. Wrong one. Yeah, GU is right back where it was this morning. It's GU there. So yeah, just The news basically, obviously we had the CPI this morning on the pound. It collapsed, did a load of drawdown control, got out of the aggressive positions. We looked at this morning in the live room. We saw these whacking great wicks. So I got into the aggressive position again in the anticipation we would push up. We've just literally done a V-shaped recovery. So if you look at this on lower time frame, it's a very typical V-shaped recovery. We get this a lot on news, especially at the moment. News isn't moving the market in the way that it should. So that is pretty typical at the minute. So yeah, I'm not surprised. So yeah, I've got that aggressive back on again. I've got another aggressive position I'm going to take. It's placed at the moment here, which is above basically high of day. I'm considering moving this up. In fact, I'm going to do it now. So I'm moving it up to just under ADR. I don't really want to get triggered on this. The idea of this second aggressive position is to get triggered on non-farm payroll, on FOMC. So what I want to do is if that US dollar negative comes in, or if the market reacts negatively to whatever it gets, I want to trigger a second aggressive, bring this right down and have the opportunity to get out of the whole lot on a 150 ADR move. I just want out. I want a shot of this. I've been in it for 2 months. I'm fed up with it. So I just want out, basically. If we can get a bigger move than that, yeah, fine. I shall bank a load of cash. But if I can get out of this with a loss, I'll be happy. It's just not working, GU. Normally when I do this, though, that is exactly the point. It actually goes the way I want it to. So anyway, afternoon, Kennelly. David, afternoon. Virginia, Neo, Mac, afternoon. Afternoon, John. Right. So yeah, there's quite a few ADRs. So this morning's news, we've got 5 minutes to the open. This morning's news was obviously the CPI for the pound. We got a completely unexpected result on that. We were forecasting an increase of 0.2. We actually got a decline of 0.1. So obviously what the market did, as I just showed, was it had an initial knee-jerk reaction of, oh my God, and then it went, actually, we're probably still going to put the interest rates up on Thursday. So we will see. But those interest rates on Thursday, sorry, bear with me a sec. Those interest rates on Thursday that are potentially going to be going up, we may not get that now. So forecast obviously on Thursday is for us to go up to 5.5 from 5.25. The fact that this has dropped rather than increased, it leaves the Bank of England in a tricky position because it's coming down, but it's still absolutely huge. It's not coming down at the rate they want it to. So there is still an argument for increasing the rates. The market, however, will decide what it does. Bear me a sec. I'm just adjusting something over here. That's good. So yeah, it's a difficult one to call. The speculators, oh, there you go, Goldman Sachs, is the Bank of England is likely to hold rates tomorrow. So they're saying that we may well hold the pound. I'm not convinced, but I think it's a 50-50 shot. This is what it says here as well. Traders cut probability of Bank of England 25 basis point hike to 50%. So it's 50-50 whether or not we're going to increase now. So that could be positive. It could be negative. We don't know. So that's what the talk's been about this morning. What's the Bank of England going to do now on Thursday? We've had a bit more Euro stuff coming through. I've just spotted something from the euro. My view at the moment is that March 2024 is probably too early for the first rate cut. So we got another 6 months until rate cuts going in on the euro. Not that it makes much difference at the minute. So yeah, tricky morning, but done what it's done. XRupdate.news. Good morning. So we have 3 minutes to market open. Didn't manage to get out of the DAX this morning. I'm still in. Well, I did manage to get out of the DAX this morning. That's a lie. So I've taken the DAX off, added a position, and we've pushed up, made a new high, and gone into this resistance, which is what I identified this morning. We've bounced straight off that resistance. So as we probably just about see, because my orders are in the way, but as we pushed up into that resistance and we got a big old rejection wick, I added a third position on. We've retested that. So it looks like it might come down from here, but if it doesn't, I will take a loss. I am getting out of the whole thing up here. So if the markets open bullish, I will be exiting that with a loss today. If they open bearish, happy days, I'll get out the DAX, but we're not concentrating on the DAX. We're concentrating on these three. So we'll see where we go at the open. As you can see, we've had a fairly consistent rally all morning in the Globex session. So the markets have been very, very consistently strong all morning. There's been very little pullbacks at all. You can see that on the DAX as well, although the DAX is a little bit more sideways than the rest, but it's still a gradual bullish move we've had. So it'd be interesting to see what we do at the open here. It's selling off pretty hard pre-market. We got 1 minute to the open. In fact, we've got 10 seconds to the open. So we might get a quick flush at the open. We'll see where we go, but tricky at the minute. Especially when you had such a big rally in the morning. Did I just... short on the Dow, short on the S&P. That range was a little bit too big. Too small for the NASDAQ. So not taking a NASDAQ, but short those two. We'll see where we go. So looking at these from a support resistance perspective today, the Dow Jones, we are very much after today's move up towards the high, selling off quite hard, towards the high of yesterday and the previous day, which is a 50% kind of retracement on the full move that we've had over the last week. Downside is very simple today. It's ADR. Upside, we're looking at yesterday's high and previous day's high for initial resistance. However, today is FOMC day. So quite typical on FOMC, we just get sideways movement, but it can be fairly decent sideways movement. It's just unusual to trend. However, we've trended quite hard in Globex. So as usual, nothing is really as it seems at the moment. So pulling down quite hard on the S&P as well. It's exactly the same thing for the S&P. It's an ADR to the downside. Yesterday's high and previous day's high to the upside. NASDAQ, pretty much the same thing. Yesterday's low, which is within ADR. And then we've got yesterday's high and previous day's high just above us there, although the markets are selling off pretty hard. So, God damn it. Always the one I'm not on. Always the one I'm not on that actually goes the furthest and the fastest and the hardest, isn't it? Really typical. So yeah, big sell-off at the start. We'll see if they continue that move. What are those stop losses? Stops haven't been cancelled for some reason. Okay, so holding short. The DAX looks like it's trying to turn tail and run the other way, look. When I said hello to you. Afternoon, AZ. Pre-market small. Doesn't look like entry on the pre-market. Well, depends what you're trading, but certainly not on the NASDAQ. That was a little bit too small today, but that is the one that's gone. This is the thing, you know, these pre-market ranges, these are the optimal ranges. This minimum, maximum, these are the optimal ranges to actually reduce whipsaw and still give you a chance at getting a decent run. However, we've seen many times in here, if you'd have taken that pre-market 15 today, you would be down at pretty much nearly 3R on that within the first initial cash balance candle. So there is an argument for taking them. However, they are whippy. You will get stopped out on them more. Afternoon, day trader. Afternoon, Hamza. US dollar CAD. We'll have a look at that in a sec. Just wait for this open to finish. 30 seconds odd. Okay, so there's your 5-minute opening range candles in. I've just got other things going on over here. Doing multiple things at once. Multitasking. We're good at that, us men. So there's your 5-minute opening ranges. Fairly big on the NASDAQ. Again, NASDAQ opening range too big. So it's not a Goldilocks today. That one's too big. That one's too small, rather. That one's too big. So I'm not trading the NASDAQ. So really pushing back up on the DAX at the moment. Just putting a new high of the session or high of the day. And no real follow through on these US indices. So we might get a bit of a just general rotation today, but we'll see where we go. Right, we'll come back to that in a minute when it's decided what it wants to do. US dollar CAD. So that's coming down at the moment. Do I want to stay in this ahead of FOMC? Might as well, actually. So US dollar CAD, I've got one long on at the moment. Back to where we started. So took this one yesterday on the RSI extension. It's pushed up into propulsion. They've sold it back off again. So again, you know, this one today, it could go either way. I have no idea where this is going this afternoon. FOMC is either going to drive it or it's going to dump it. We don't know. So we've got oil at 330. So we could well have a move off of the Canadian dollar this afternoon at 330 before FOMC. But either way, this is going to rally or dump. So when you've got positions like this, you've got the choice. You can either close it now and just get out of it and go, don't want it anymore. Or you can hold it and hope that we get a rally on the US dollar. Personally, I'm hoping for a dump on the US dollar because I want pound US dollar to rally. But if I hold on to this, it doesn't matter which way the US dollar goes, does it? If it rallies, I win. If it dumps, I win on the pound US. So it's a kind of hedge. But yeah, not really going anywhere. We've had this big drop. So got out of all the shorts and flipped long, basically. So question is, what's the Fed going to do with the US this afternoon? Nobody knows. So I'm going to leave that on for the minute. But if it drops, we've had a fairly decent drop on this with no, I mean, that's a kind of profit take on that part of the move just had. So if it drops, I'll be looking for somewhere down there to get some kind of bounce to get out of it. We'll see. We'll see where we go. So ADRs today, I was looking at oil before we came on. So oil's hit ADR today. I wasn't expecting quite such a big move on oil. Said this morning, we've had quite a big sell-off on oil this morning. I would expect it to go sideways, which it did for most of London, but we did get one big push down straight into ADR. You can see it came straight into ADR, bounced straight out. So if you're taking a 5-minute reversal alert on that, you'd be in there nicely in profit off of the ADR bounce. So yeah, good moves on that oil today. I don't think this is deep enough for a pullback, but who knows, might be wrong. Obviously we know it's a long oil, but it's whether or not it's going to pull back before it rallies again. So tricky one that. So that's an ADR hit. We've got a couple of other ADRs as well. Obviously most of these are pound related today. Euro pound ADR hit to the upside. That one hasn't done a complete retracement yet. So 5-minute reversal alert. You did have one earlier than that. So your first reversal alert on that one today. Oh, that's tricky. I'm going to need a line for that. This is like a photo finish. Your first reversal alert on this today was probably there. Definitely there. So because we pushed up, that's the high, that's the lowest candle, that's the last down candle. Oh no, sorry, scrap that. I'm blind. Your reversal alert was here this morning. That candle there. That was your entry, short. So that was your first reversal alert today. Just gone sideways since then. We put in a new high, so you just got a second reversal alert in. So it's in profit. Looking for it to push back and complete the gap, or just basically complete that propulsion gap, basically do a reversal. So that's euro pound extended. Pound odd also extended to the downside. That one's come off of 125 ADR. I've taken a second entry on that one this morning. So first entry was a few days ago. Second entry is here. So there's the reversal. Looking for it to push up into propulsion. Need to put a TP on that one. So pound odd, pound Swiss. Again, nice reversal. That was a beautiful rejection straight out of these lows. So these lows here have held very, very nicely. Lots of wicks. So nice rejection off of ADR. So we pushed straight down into ADR on the news, and then you got the reversal. Very hard to get into these today. Always is with news. So you had one reversal alert there. That was it actually, wasn't it? So there's your W pattern reversal, but we just sort of hovered around. Now we're pushing up. So I think this will get done by the time FOMC comes around. We'll be back to where we started. Pound New Zealand, again, nice reversal alert on this one. Beautiful sell-off. So there's the news. We accumulated and then we sold off. We had a strong Australian New Zealand dollar push this afternoon. We've got the reversal alert down there. There's your W pattern. Nicely in profit on that at the moment. So half an ADR, which is typically what you target with ADR reversals, would be 61, which is somewhere in that propulsion gap. So there. So where they broke that accumulation, that's a good target. Could obviously come all the way back up to origin of the move. And New Zealand dollar yen. So we had a weak yen this morning. Very weak yen. We had a lot of push on these yen pairs. We almost got ADR on the Aussie yen. CAD yen pushed up a little bit of a push up on the Swissy. Euro, bit of a push. So we had a big sort of sell-off this morning, but wasn't particularly strong, but it was a sell-off. So New Zealand dollar yen, we've had a strong New Zealand and a strong Aussie today. So that's taken advantage of it. Obviously this weak yen, and we've got an ADR hit. So if you look at the US dollar yen, we looked at this morning and I said, so just to recap, last night, overnight, we had more talk from Japan. So Japan came out last night and said, from Canada, We are closely watching FX moves with a high sense of urgency. Japan is closely communicating with US authorities over Forex on a regular basis. E.g., stop pushing against the yen or we will intervene. Usual stuff. So this morning, of course, the yen got weakened. We pushed above it, but they've completely reversed that move. So if you look at the US dollar, this is weakness in the US dollar that's causing this. So we had that little flurry in the yen, a little flurry of yen weakness. Dollar wasn't doing anything. That yen weakness has stopped and the dollar has dropped. So thankfully, we're back down below that 148 level. If FOMC pushes the US dollar this afternoon, we'll have more talk from Japan overnight, and then we'll start to think seriously about that intervention. If they drop the dollar, it's not a problem. So either way, if you've got any yen exposure on it, it needs to be down. You want to be buying the yen. You need to be short everything against the yen at the minute, just in case. Aussie dollar, there you go. So Aussie dollar and New Zealand dollar, US dollar, as I just said, we've had a very strong Aussie and New Zealand, and they're continuing that rally at the moment. So nice, big, strong moves off this Aussie. So we've got an ADR hit, Aussie US. We've got a New Zealand US ADR hit. So drop down M5. Wait for the reversal alert, which on this one is going to be very tight. Aussie dollar, US dollar, again, fairly tight. Reversal alert. So as soon as you get the reversal alert, drop it. Aussie yen hit to the upside. So we've had the New Zealand yen that's hit already. Aussie yen has just hit as well. So there's your ADR extension. Again, take a reversal alert. As soon as you see the sellers take control, you can jump in short on that one as well. But this Aussie is still moving today. Nice decent moves to the upside on the Aussie. So there's all your ADRs, quite a few today. We're starting to get a little bit of movement, which is great. The only thing is I need is weakness in the US dollar. So not getting that at the moment, hopefully this evening. So Aussie dollar Swiss, we've got some ADR extensions to the upside as well on the hourlies. Let's just have a quick catch up on the chat. Afternoon, it's time. Afternoon, Astro. Afternoon, Abdul. Keith. Does trading live affect your trading psychology at all? I know a lot of people stop doing lives because they say it affects their trading. Depends how you trade. Doesn't affect me. I'm doing it anyway. So my view on it is I can either do it not live or I can do it live. Doesn't affect anything, does it? My psychology doesn't change because I'm making decisions. I'm making my own decisions. You're watching me make decisions. That's it. The only way it does affect me is every now and again somebody will call out something like Hamza's just called out CAD Swiss, and I'll go over to the CAD Swiss and I'll go, oh, that looks good, and I'll short it or I'll long it because I haven't looked at it. But it doesn't affect me psychologically. I make the decision to go short on that now, and I'm in it. That's it. I deal with it. So it doesn't affect me psychologically in any way, not that I'm aware of. Mind you, I've been doing it for over nearly 5 years now, so I wouldn't know, to be honest. I got US dollar yen sells since May. You've got US dollar yen sells since May. How are you still in that since May, June, July, August, September? How are you in US dollar yen for 4 months? Why are you in US dollar yen for 4 months? How could you be in US dollar yen for 4 months? I don't get it. Right, this is May. Are you talking about position trading, Keith? I have to say, if you got in on that in May, which is really the only signal you could have taken in May, why are you not out? You couldn't not be out of that. Even if you scaled into just 2 positions anywhere up here, you're out there with a beautiful, massive profit. Views.com. CAD Swiss. Yeah, CAD Swiss rallying like a crazy beast because of oil. So oil's rallying like a crazy beast. The Canadian dollar is rallying like a crazy beast. Euro is dropping at the minute, or has been dropping off the back of the rate announcement. So obviously, Swiss franc weakened with the euro. Canadian dollar rallying off of oil. Perfect storm. But you're only 2 weeks up, really. If you look at it, it's actually kind of like 3. So that's week 1, week 2. But if you look at it, we didn't actually go anywhere for those 2 weeks. So we're really only 1 week rally. We're up on week 2 at the moment. We've got 2 days left yet. If that US dollar comes down this afternoon, you'll be down there. So we'll see. Beautiful reversals started yesterday on this. So we looked at the CAD Swiss. We've been looking at the CAD Swiss pretty much every day. This level here is the next kind of support resistance area that is likely to be reactive. Failing that, that's the most recent support there. We broke. So it's this propulsion gap, basically, as you can see. So this propulsion gap here is that breakout, and it is also framed around that support resistance area from before. So it's this orange line, basically, 150 ADR. So it's either going to push up to that level and find some sellers, or the US dollar is going to drop today. The Canadian dollar is coming down anyway. So, but nicely extended, has been extended since back here. So you can see my first entry on this. You can't see it because it's on the 4-hour chart. But my first entry on this was there. Got a second on at the moment there. So that was the H1M5 mean reversion entry. Since then, we've gone sideways for 2 days. Then we had that push up yesterday, which did the drawdown control on that first position, or the EA did it. Second position was taken yesterday as well. So if it does rally up into that other one, there'll be a third going on. Market is just killing me at the minute. Honestly, this is the worst month I've had, I think, in probably about 3 years. It's just horrible, horrible. I've never seen so much sideways whipsawy crap in my life. Literally, it's like the banks have gone, tell you what, let's just go sideways and kill everybody that trades for 6 weeks. Just nasty. Hedged on the Dow, not in the NASDAQ, in short on the S&P. So out the DAX, nice big loss. There goes yesterday's profit. Market at the moment. It's almost like I just want to take the rest of September off and go, screw you, markets. When you've decided what the hell you're doing, I'll come back and play again. But at the minute, nothing is working. Literally, it's one of those periods in trading where you just rip your hair out and go, nothing works. Literally, nothing works. I've been watching, this morning I spent a little bit of time actually watching some other traders, which I don't usually do. And just flicking through some Telegram groups and that sort of thing, just to get a gauge of what's going on. And it's nice to see pretty much everybody I respect in this industry getting slaughtered. It's not just me. It's everybody. It's just getting slaughtered because this thing is just totally unpredictable. It's always unpredictable, don't get me wrong. No one knows where it's going, but there is no structure in anything at the minute. It just does what the hell it likes, when it likes. Well, and it's just no catalyst for anything, is there? So, and even the catalysts we get, which the banks and institutions use to move in the direction they want to do, they can't even move it that way. It goes the wrong way. Someone somewhere is pulling strings that even the banks are getting creamed with, but they just move it back and make their money. So we, they can't lose. But yeah, out of the DAX, hedged on the Dow. I'll come back to that later. Nothing we can do with that, is there? So let's look at the RSIs. Keith, I take 0.01 when needed. Okay, Keith, I would go back and watch the bootcamp on the website if you haven't watched it already, because if you're still in something from May after you've had pretty much 100% retracement on the move, you should have been out of that. Yeah. So you can't still be in that trade. Yeah. Can't even see it on the hourly. Let's look at it on the hourly quickly, just to confirm, right? it doesn't matter where you got in. If you got in here, which was the first real signal, I mean, you should have been out on that anyway, but let's say you didn't get out on that and you missed it. If you're going to scale into a trade, you got into it sometime in May. Yeah, that's April. So you got in somewhere around there, I'm guessing, which is probably right. So you got in about there. Yeah. If you'd have scaled in with one ADR between positions, which is 77 pips, that has moved 650 pips to the upside. Yeah. So if you were scaling in an ADR, you'd have got in there, you'd have got in somewhere around there, you'd have got in somewhere around there, you'd have got out there. If you miss that for any reason, if you miss that 1 to 2% profit on your account for any reason, you went sideways for 2 weeks, and then you'd have taken another and another and another, and then you would have been out with somewhere in the region of 5 to 10% profit on your account. If you haven't got out of that trade, I just can't see how. How could you possibly get in May and not exit when the original position you would have taken out of probably 6 to 7 positions got to break even? Every single one of these positions you took after is in massive profit. What am I missing? Or rather, what are you missing? I'm not being nasty, Keith, but I just can't look. Well, there's no logic in this, yeah? Position trading, you scale in to moves and wait. That is the best possible exit I've probably seen this year. And I've seen a lot of crap this year so far. So I can't see how you're in it. Yeah, I mean, look, even if you got in on that, there's just so many exits. There's so many exits. Look, I got into a position there. There's my scale-ins. 1, 2, 3, 4. You had outs. You had many outs. I was out there. Something's gone wrong. Go and watch the bootcamp again. I think you've missed the exit criteria, basically. I would imagine. Just closed long on gold. Big move up pre-FOMC. Yeah. Wow. Yeah. Big strong drop on the US dollar ahead of FOMC. There goes pound US dollar. I'm triggered into that second entry. I didn't want to be in that yet. Minute. So yeah, nice move on gold. So obviously US dollar's dropping ahead of FOMC. They're selling the US dollar off. Always worries me when they do this. Are they enticing everybody to go long? Ready to dump you? Or has it been leaked? Conspiracy theorists, chirp in. You also traded DAX in the US session? No, DAX in the morning, DAX in Frankfurt. Were you watching Mamba's 2-year-old making 45k? I definitely wasn't watching Mamba, Brian. If you missed part of what I said there, I've been watching YouTubers and traders I respect. I've never watched a Mamba video in my life. If you hadn't have told me about Mamba, I wouldn't even know it existed. And it doesn't take much, does it, to look at him and go, no. Yeah, we've looked at him a few times. Does this look like a trader you should respect? Probably you should respect him, but respect? No. The fact that he shows you his mobile phone as well. Hey, look, everybody, I made 1.1 million on my mobile phone. No, you didn't. You're lying. You're totally lying. Prove it. Sorry. It's going to be one of those sessions today because the market's upset me and now I'm cross. Calm. Who are YouTubers you respect? Other than you, I don't find any of them valuable. So people like, well, not YouTubers, not necessarily YouTubers, people that trade. So people like Kunal Desai, people like Tom Hugard, people that run respectable trading companies, trade live in front of people and make money every day. They're all getting killed. Not necessarily all getting killed, but not having the best month in the world ever. Yeah. So, People that do this properly, not people that go, yeah, I made 1 million on my mobile phone, man. Yeah, nah. Don't watch them. One of those days, yeah, it's one of those days. Canal, Bulls on Wall Street, yeah. He's constantly in my YouTube shorts, can't get rid of him. Ad blocker. I need some neck tattoos. I've got some bling. Yeah, I could do some bling. Get strangled, yeah. Okay, is that better? You can't even see it, can you? $7.99 on Amazon. Even comes with a bracelet. Bling's all good. Neck tattoos, yeah, that would be good. Nothing like getting a couple of neck tattoos and a gold tooth to make you look like a professional trader, eh? Anywho, yeah, so going back to FX, seriously, I honestly do want to take the rest of this month off. It's been one of those months. You just sometimes, every now and again, you just need to go reset, stop. Because if you carry on, you're likely to blow yourself up. And that's one of these, not this month, it's the last 2 months, basically. So I really want FOMC to properly move the market today. And let's get back to the good old days where we get 200% ADR moves on news. And then the market goes, oh, okay, we should be buying it. And everything starts to kick in and they start doing profit takes and the indices have a load of movement and, you know, the good old days. July. How's the new EA development going? I haven't got anything yet on it. So it's still in development. It's still working, but I've got to do some, the EA is pretty much finished. I need to confirm whether or not the edge is good enough. Basically, there's no point in me. I mean, I can put this out there now, and you can have it now. I obviously put everything I do. I put out with a caveat. You know, I've no idea if it's going to make you money or not. It's an EA. All it does is take trades based on a rule set that you program. I don't know if it works, but for the back testing that I've done, there's a definite edge and a lot of profitable permutations. Pretty much all of them profitable. However, there's a Achilles heel in the fact that on news days, it seems to be news days, and I still haven't confirmed it. I need to go through all the screenshots of every trade, but it seems to be news days are a massive problem. So I need to basically get a filter in place, not a filter on the EA, but a decision-making process in place for what do we do if we're hedged before a news event. Yeah. So that's the next step, but it's going to take me a while to do that. I've got to go through 3 years worth of back testing. So that's not fast. Traders TV Live. Stocks trading channel, is it? No, I don't know. I need green hair. I can get green hair. I can do all this. I can get fake sleeve tattoo. I can use my bling. I can dye my hair. Get a gold tooth. Cool, man. What do you think of Tom Dante? Never heard of him. The problem is, nowadays, there are 1,000 people out there trading online, aren't they? There's literally hundreds of them. There's guys dressed up as pandas. There's guys, there's, you name it. It's almost like a fetish. You name it. If you want to watch a guy dressed as a panda trading, you can do it. No idea if he's any good or not. He seems to trade some weird strategy I've never heard of. Sometimes it works, sometimes it doesn't. The last couple of times I watched the panda guy, which was a good 3, 4, 5 months ago, I check in on him every now and again, and he was trading a funded account. And every time I check in on him, he's trading a different funded account. So I can only assume it's not going very well. But I don't know. First time I checked in on him, he was trading a 50 grand funded account. The next time he was trading a 100 grand funded account. And then he was trading a 200 grand funded account. And then he was trading his own cash. So I guess the 100, 200, and 100 grand account fell by the wayside at some point. But I don't know. Anyway, I need to get on with some strategy. Dow's broken out to the upside. Sorry, I got an itchy nose. So watch yesterday's high, which we're at right now. and previous day's high, which is this dotted line here, which is just over two and a half hour away from the pre-market 5 break, which is taken here. But yeah, so watch this level. We've got some rejection stepping in, so you can see the limit orders triggering at the highs. I would much rather this rejected today, and we got a big strong push down into here somewhere, because I would probably take it off down there ahead of FOMC, because I get the feeling that's what we're going to see today. But I want it to move far enough to give me some confidence that we're going to get a pullback on it. So I'm not going to take that, but that could be the turning point. NASDAQ, sorry. NASDAQ, I'm going to sneeze. Hasn't managed to get anywhere today. We had that initial push down, push back up. We're still sitting sideways. Dow Jones, S&P, same thing. So I'm on a short break at the moment. Huge wicks, tiny bodies. That's not doing anything. Same as the DAX was this morning. Just not going anywhere at the moment. But we are rejecting the upside by the looks of things. So that initial break to the downside could be high, low, lower high, and a break back down into propulsion. Kind of need it today because I got some money to get back off the DAX, but we'll see where we go. At the moment, not very directional. So if we can return a profit in these conditions, we should be quids in when the market returns to normal. Absolutely. Yeah. Or don't trade big news days. Yeah, exactly. That's it. So there's two, with the hedging strategy, most of the losing trades, where did I put it? Pound US dollar, oh God, ADR. Sorry, one sec. So we've hit ADR on the pound US to the upside. So complete reversal on the negative UK news this morning, and that US dollar coming down hard. So they're buying they're buying the pound back up, and they're not actually buying the pound up that strongly. This is US dollar weakness at the minute. Euro US dollar was probably popping as well. Yeah, we just about hit ADR on the Euro US dollar as well. So with the big down days, so when you look at the big down days, I think there's one fairly close to the start here. Look at that. See, that's a pre-market 5. If you'd have taken the pre-market 5 or 15 that day, although that range was way too small, 145 was so like 14-point range pre-market, not big enough to trade because it's too tight. You'd find it difficult to get the trades on, and you'd usually get whipsawed on those. But look at that. That's 5R. So 10R, 15R. Huge break. I'm just trying to find a big losing day. I haven't got the spreadsheet, so I can't actually see. I can't find one. But on the big losing days, basically, I wonder if I should go the opposite direction. I'm going to find one now. It's typical, isn't it? So that's just a hedge. That was a break even. The win. That was. Oh, I can't find one. But anyway, news events. So those are the ones that kill you, basically. So it's the days where you get those huge spike moves. And what happens is you basically go straight into target. You hit your target. And then because the news spike is so fast, the pending orders don't actually tend to trigger straight away. So as soon as you get a move down, you get a pending order trigger. And what happens is the news event continues the move. Yeah. We haven't had days like this for months since we've been running into terminal rates on the interest rates, which we haven't actually got yet, but they keep promising, which is why the market's so screwed up at the minute. We haven't had any of those big days where we've had these huge runs. But those are the days that kill the strategy. So I need to deal with those. One of the ideas I've got to deal with those is to re-hedge. So when you get a hedge like today on the Dow, here. So we're hedged in on the Dow basically at $300 odd loss. So that's it. It's $300 loss. Right now, if I just close this out any point in the next 10 years, that's the loss. Doesn't matter whether this goes up, down, whatever. That's it. 300 odd or 200 odd. Assuming that has got all the positions on. That taken 2 trades? Why is that going down? Something's gone wrong with that, hasn't it? I've only got 3 positions on the Dow. I've got 2 longs and 1 short. Something's gone wrong with that. Should be hedged on it. Not for some reason. That should have a second sell. Okay, need to figure out that. This is, again, why it's being live tested, because obviously you need to find bugs. There's one there somewhere. I need to look at the logs. But yeah, so if that was hedged properly, it would be locked in at X, Y, Z, whatever that is. So if you, let's say we run now with this to 5R, which is target. Yeah. We run now up to 5R. Nothing's going right today. We target, we hit TP on that, we get hedged short. Yeah, so we wait for price to come down, we get in on the short, and then it basically does that and flies all the way back up. We can re-hedge. So what you would do is you would lock in your loss down there. As you push up, you take profit on the longs, and then you try and re-hedge yourself. When you get short, if it doesn't come down into a pullback to escape that short position and get you out either a break even or a bit of profit, and it decides to push back up before that's achievable, you'll re-hedge yourself. So all you're going to do is lock in another hedge loss. So where we're getting these days in the P&L, kind of needed to show you the P&L, didn't I, before I started looking at that. So it actually made sense what I'm talking about. So if you weren't here this morning or yesterday when I was covering all of this. So load. So this is the results of one of the set files, and basically a day-by-day account of how many times we got hedged, how many times we won, how many times we lost. Gives me all the statistics and data. But you get these massive losing days, 24,800 loss. Yeah, so big loss. Reason being is it went like 175 ADR. So when we get that 5R exit, we then put pending orders to trigger to come short. If the short doesn't work, what happens is it goes up 150 and you just rack up not 1 short, but 2 short losses. Yeah. So it makes it exponentially bad. So if you hedge back that way, as it pushes, that 24 grand becomes 6 grand. All of a sudden, you're making a massive amount less on each loss because you just re-hedge it. So it's a kind of fallback. No, we can't make money today, but we're not going to make a massive loss. We're going to make a small loss. Yeah. So it'd be like a normal day of loss is 2.5, 3 grand. That's a normal losing day. 1500s, yeah, 1800s. You get the odd bigger one in there, which is a 6 or a 7. And then you get these news ones. So we can eliminate those, and that instantly turns every single variation of it profitable. Yeah, so that's the idea that I've got. The problem with my idea, which I've got to test because I've got to reprogram the EA, is if you hit that 5R target and you don't get triggered on that, you can't hedge it. So I've got to change the logic of how we get in when we hit our 5-hour targets. So this is not making sense to people that haven't been in here for a while and don't know what I'm doing at the moment with this hedging strategy. But what happens is when we get a clean break, we get out at 2R, we protect it, and we just take a profit. If we get hedged, our 2R targets move to 5R targets. So we wait for the move to complete, and then we start to get out on the pullback. These TPs have got to be removed. And what we need to do is when we get to 5R is we start trailing. A trailing stop for the long and an entry short. Then we can hedge. So I've got to completely change the logic of the EA, if you see what I mean. That's the easiest way, I think, to eliminate the losses. Because you're not going to stop the losses. You're going to take losses. There's nothing you can do about it. This market is not going to let you win every day. You're going to lose half the time, at least. So what we've got to do is minimize the amount of loss, not eliminate it. You can't eradicate loss. You've got to take loss. But what you can do is you can make the losses smaller. So that's what I've identified. So to cut a long story short, how's the new EA coming? Fantastic. Just got a few problems to sort out. Why didn't I just say that in the first place? So there you go. There you go. Yesterday's high is holding on the Dow. The Senate is talking at the moment. Right. So big sell-off underway. Look at that. Stop me out on my DAX and then collapse. Closing longs. This looks like the start of a big sell-off to me. And I'm short on the S&P. Just going to increase target on that. Just in case this thing collapses. This might be the start of a US rally as well. So just watch the US dollars. Yeah. As the indices come down hard, you tend to find the US dollar will start to push back in the opposite direction. A little bit of bullishness coming in on that US dollar. Not sure how the wife would feel about the green hair. No. Kids would like it. I think NASDAQ took some X and went to a rave this morning. Quite possibly. Everything's taken something and gone to a rave this morning. So I've just got the one short on the Dow at the moment. So if we do actually get this rally start to the downside, I'll probably get another entry on that Dow short. I'll have to do it manually. Easy to start my own brokerage. Is it easy to start my own brokerage? I don't find things fair that brokers are making money off spreads. You can start your own brokerage if you want, Paolo, but how are you going to make money if you don't spread the market? That's the job of a brokerage. So just to let you know, to start up your own brokerage, minimum investment into starting a brokerage is $250,000 for the licenses. And then you need approximately 10 to 20 million in segregated funds. So unless you've got 20 to 30 million in the bank, it's not easy to start a brokerage now. If I was you, I'd just get on with trading. If it was that easy, I'd have started a brokerage years ago. A lot of people I know have worked in brokerages and banks, and yeah, they make a lot of money. But if you want access to the markets, you've got to find someone that's got access for you, and it's your broker. Yeah. The banks can't do it because the banks have a non-compete rule where they cannot provide liquidity and execute on behalf of you as a retail trader. So you have to have brokerages. That's why brokerages exist. Otherwise, you just do it with your bank, wouldn't you? Fortunately. What do you think about the euro strength? Do you think it will hold, or is it a bull trap, as the cool kids say? I don't know about the euro. Really don't. Lagarde screwed us. So I got out of the euro odd on Monday because I was concerned about a new leg, which it seems to be happening. This euro is not particularly strong, but it's not particularly weak either. When we had COVID, Europe shut down and the travel and tourism industry shut down as well. When we came out of lockdown in the UK and Europe, it all started to pick up again, but the euro didn't pick up at all. And it became kind of the whipping boy of the market. But when the euro goes neutral, i.e. it doesn't have any strength because there's no economic growth forecast, and it doesn't have any weakness because there's no contraction forecast, you get a complete neutrality in the euro. The problem with the euro is it's made up of lots of different states or countries that make up the euro, but Germany and France are the more than 50% contributor. It's a little bit like the NASDAQ. You've got people like Nvidia who contribute 20% of the entire movement and the whole index, which is why everybody trades things like Apple and Nvidia and Microsoft. But you've got Germany, and Germany is a motor-related industry. Yeah. So a lot of the GDP for the euro comes from the motor industry, and the motor industry is struggling at the moment. And everything is struggling in the euro at the moment. So you tend to get a lot of sideways movement on it. When that happens, what happens is the opposite cross is what drives it. So if the euro is flatlined and the Canadian dollar rallies, it goes down. If the euro is flatlined and the Canadian dollar drops, it pops. So I think that is where I think personally we're going with the euro, kind of back to where we were 2 or 3 years ago, where we're not really going anywhere. But that is kind of true of a lot of currencies at the moment. So I don't think there's any reason for euro strength. The euro are not going to drop their rates until probably middle of next year. So there's no bullishness. There's no reason to buy it. But equally, there's no reason to sell it against any other currency because all the other currencies seem to be teetering on the edge of just increasing a little bit more interest rates. So there's no bias. So I would say at the present time, you can probably buy it or sell it. And you should have enough movement in it to warrant getting in and out as normal. But we will probably have a currency become dominant shortly. We just don't know which one it's going to be. It's going to be the first one that I think that not the dominant currency, but the weakest currency is going to be the first one that starts to drop interest rates. So the dominant currency will become the one that is increasing interest rates as the others are pausing and dropping. We haven't got that yet because everybody's been doing the same thing. So when you look at the fundamentals, what we're waiting for is one of these to have a couple of months of continuous movement up, everybody else to be frozen. And that's pretty much where we're getting to at the moment. Yeah. So the pound, the way it's going at the moment with its interest rates and inflation, should become the dominant currency soon. The US dollar should become the currency that drops the first because its interest rates are the lowest. Look at the euro. We're hovering around the middle, still increasing. So this one, I think, is going to hold its ground. But none of that is going to be true unless that starts to drop. We've got to get this this US dollar weakening and then saying we've hit our terminal rates. Until then, I think this market is going to remain as we've had for the last couple of months in an absolute mess, which will be problematic to say the least. But it's not a lot you can do about it, is it? Just got to sit and wait and see what happens. Normality will return at some point. It has to. Well, I hope it has. But then again, we've never traded through a COVID recovery before. No one has. So it's all new ground, isn't it? We've never had BRICS starting to affect things before. We've never had a war in Europe before. There's so many firsts in the last 3 years. Nobody's got a clue what's going on, really, do they? Evening outro. ORB is the 5R equals 1 ADR. I'm thinking of buying a Fivers account. I wouldn't bother outro. If you're buying any prop account at the moment, you're flipping a coin as to whether or not they're going to go bust tomorrow and disappear. Yeah. The second largest prop firm in the world has just been sued for fraud. I would say the rest of them are probably a little bit less inclined to do things above board now. I don't know. Maybe, maybe not. Day Trader FX. Nord Stream is bombed. When? Has it? I haven't seen any news to that. So yeah, JC. So ORB, no. So the opening range, these measurements you see on the chart here, these are 1, 2, 3, 4, and 5 times whatever the range is. That range will vary. Yeah, depending on whether you're taking a pre-market 5, 10, 15 candle, whatever it is. Yeah, so all this is doing is it's measuring 5 times the range of the break. ADR is always going to be somewhere around 5R because I am using a maximum range of 20% and a minimum range of 10% of average daily range. So by its own definition, if we get a maximum 20, it will be up at 5R because 5 times 20 is 100, which is 100% of average daily range. But where the range increments fall will depend on the actual size of the range. So it's dynamic. It's dynamic based on the average daily range of the movement of the instrument. Now it's pushing up again. Look, I'll tell you what, this day needs to finish soon. I can't win today. I'm having one of those. You screwed everybody. Yep, Lagarde. All banks have screwed everybody. Not today, but has affected the euro. Oh, Nord Stream bombed. Not today, but has affected the euro. Yeah. Well, I mean, there's so much that affects the euro at the moment. Obviously, the war is affecting the euro. The fact that we're not getting any information out of the ECB about forward guidance is affecting the euro. But that's true, as I say, that is true of everybody at the moment. Yeah, we had an instance the other day where was it Kazakh came out, I think, from the ECB and said something along the lines of it's too soon to say that we will increase interest rates again. The more likely outcome is that we will freeze rates for the rest of this year. 2 minutes later, in the same statement, he said, do not rule out another 0.25 increment in our interest rates. Hang on a minute, mate. You just said you're going flat and you're not going to increase, and then 2 minutes later you're saying you are. This is what we're getting from the Fed, from Bailey in the Bank of England, and we're getting from the ECB. We're getting total mixed messages at the moment because nobody in any of the banks have got a clue what they're doing. Yeah, they're all putting up interest rates at a rate of knots to get on top of inflation. Inflation in Canada going up. Inflation in the US going up. Inflation in the UK year on year just about gone down, but was forecast to go up. Freezing inflation in Switzerland. Yeah, it ain't working. They're all wrong. They're all getting it wrong. But that's banks. Don't do anything different, do they, normally? Right, let's do the RSIs quickly while I'm waffling. Aussie dollar Swiss, extension to the upside, just about got extended above the 70. Not a great extension. I would like it a little bit further than that. We've got a big rally, which we've just accumulated out of and accumulated again. So for those 3 leg traders, there's leg 1, there's leg 2, we're in leg 3. So whenever you get an RSI extension next, we should get a pullback on that move. So it looks pretty good. That's extended on the 4-hour, which we know the Swiss franc has been weak. The Aussie dollar is strong at the moment, as the New Zealand is. So we've been extended since here. So you would have been in this from last week. Not really gone anywhere for most of this week. Big push, big push. This is the problem with the market at the moment, which I've said about a few times. We're getting multi-day accumulations, which just go on forever. And then you get one thing that goes pop. And then you sit there for ages. And then you get a little pop. And then you sit there for ages. Market structure is normally like this, pushes and pulls. What we're getting is accumulation, push, accumulation, push, accumulation, push. That is not conducive to anybody trading because in every accumulation, everybody gets killed. In every push, you get a tiny bit of profit if you're lucky. And then you go into another accumulation where everyone tries to trade because they're thinking everything's pulling back, as it usually does. And you get killed, and then it pushes. So this is the problem with the market at the moment. And this is why the position trading is so difficult at the moment, because we're not getting the pullbacks. We're getting accumulations, which resets your RSIs. But nothing much you can do about it at the minute. Aussie dollar yen also extended on the 4 hour, as we know. The Aussie dollar's pushing. The yen's been a bit weak today. The rest of the yen pairs weakening a little bit, not a lot. This US dollar yen is still coming down, which is good. So Aussie dollar yen extended to the upside. Very nice extension. Big strong push, pullback. Looking for a pullback on that one. Nicely extended. Hourly also extended. Reversal alert should be coming in on. Oh, you just had it. Literally just had it. You had one already this morning here. So you would already be in that now. So that was the first reversal alert today, was there. And that's just been invalidated with a new high. So potentially putting in an M pattern reversal there. That's also about to hit. It just has hit ADR, sorry. So that's a reversal at ADR. Could push further though. So we'll see. As long as these Aussies are pushing, we're going to continue up today. Aussie US, same thing. US dollar's very weak at the moment. We're pushing up. I've got longs on this at the moment. I've got a lot of things long against the US dollar at the moment. So this being one of them. This one's in profit at the moment. There's only 2 positions on this. So we are extended to the upside. I'm sorry, there's 3 positions on this, I think. 4. So yeah, it's above break even. So I'm looking for a big strong push up on FOMC this evening. More weakness on that US. We've got CAD yen extended. That one's already pulled back. So this was an entry yesterday on the hourly RSI extension. That was your 5-minute reverse alert. Hopefully M pattern reversal going in there, but that is extended on the 4 hour. Sorry, not the hourly. That was extended on the hourly yesterday. 4 hour extension this morning. So we're looking for a pullback on this move here, back down into the 72.24 area, or back down into this potential support. Euro pound extended on the 4 hour. That's just come out of extension now. That's going to turn off in a second. We've already missed this one. If you wanted to get into that, you've missed it. Crude oil inventories just come out minus 2.1 off of a forecast of minus 1.7. So 2.1 off of 1.7. Um, 1.3, different forecast on here, but that's obviously bullish because the inventories are down more. Less supply equals higher prices. So we'll just see for what that market makes of that. But crude oil inventories are very hit and miss. So doesn't seem to be doing particularly a lot at the minute. We'll come back to that in a minute. So CAD yen, nicely extended. You've had the reverse alert on that one. Already short, looking for a push down. So again, on this one, I've got that short on. I've got target down there. I'm just going to move target down a little. So if we do get this sell-off on the US dollar on FOMC, we should get a drag down on the Canadian dollar. And if they pull money out of the US, they will quite often put it into the yen as a holding pattern, which will make the yen stronger. So the yen pairs will drop as well. If the US dollar drops, the yen pairs will rally, which makes everything drop against it. So that US dollar yen will get double bubble. Will be down at 200 ADR. Euro pound, that one's already played out. We looked at that one. Pound odd extended on the 4 hour to the downside. So got longs on this one as well at the moment. Got 2 positions on this. Average is there. Just looking for a rally back up. We're down at a monthly level here. So that is last month's low, which basically we kicked off last month and didn't stop. So we're down at last month's low, which is basically the open of last month right now. We've got this other low from 2 months ago back here, which is a previous resistance. So if this does continue to drop, we've got potentially 250 ADR to the downside to scale in. And then by then, we'll be massively extended down below that level. And then obviously looking for that push back up, retracement. So that's pound odd. Pound CAD is pretty much the same. Nice rejection at the moment. Got buys on this. We got this rejection at this previous support. We tapped into it again today, rejected, and it's pushing up again at the moment. So Canadian dollar coming down, US dollar coming down. Pound seems to be recovering from its moves this morning. It's obviously going up at the minute. New Zealand yen continuing to push 125 ADR. So this thing's not stopping. More extended that gets, faster that pullback's going to be. So just keep an eye on that. Still going, but just watch for a reversal. Be there. Pound New Zealand. So this is stuck at the minute. We've got strong New Zealand and we've got a little bit of a pound move coming in at the moment. But obviously, because they're both being strong at the same time, we're not getting any movement. But look at it on the 4 hour. This is really, really extended. Really extended. So we're down below now that 20 level. As you can see, it's the only thing that is extended beyond that level at the moment. We were extended yesterday, I think. Did we not get extended on the hourly yesterday? I thought we did. Maybe we didn't. Did just about today. That's really tight. The basically the RSI reading when the reversal happened wasn't below 25. So the EA didn't take the trade on this one this morning because the RSI wasn't extended. But by the time the reversal had happened and pushed back down again, it was extended. So the EA just missed an entry on this one today. But the pound odd is pretty much the same trade, and that's the one that I'm in at the moment. So, but that's more extended, the pound New Zealand. So we got this massive strong move down that they've not pulled back on at all yet. So that accumulation started there. We started this push down. No pullback whatsoever. So we're looking for a pullback on that. Support-wise, could be absolutely anywhere in here. We've got a monthly low, as I said, that second monthly there, but could be anywhere in there, literally anywhere in there. So just waiting for that one to push back up. So if this does continue to push down, nice entry long. But we've missed the entry on that one today. Down there, there's your W pattern off of 125 ADR. New Zealand on a Swiss. Not going anywhere, are we, at the minute? New Zealand dollar Swiss extended on the 4 hour. Beautiful rejection up at the 72 at the moment. So this area here is where we are. So this area that we pulled back into basically is what we're sort of tapping into at the moment. It's a bit of an odd resistance area. It's not really what I would class as a decent resistance. It's not been tested that many times if you look at it. It's this zone somewhere around here. I mean, that area actually isn't bad. So it's this area here, which we tapped into, hit it again, we hit it again there, we hit it again there, accumulated around it, accumulated, and then we've used it as resistance as we came and broke through. So it's kind of all right, exactly where we are at the moment. Basically, the pullback on a trend tends to be back to the 24. And if the 24 fails, we come back to the 72. And then it will either fail and we'll get a structure break to the upside, or it will continue from the 72 as it did there. So this is either that push down on the New Zealand dollar, or this is going to just pull back and then rally back up again. But either way, if you're not in it, you can take a first entry on this New Zealand Swiss. It's nicely extended, so drop down to M15 or M5. M5, you've had the reversal already. Yeah, so there's your high, low, lower high, lower low. There's your market structure break. So that could well be where we drop from. New Zealand dollar yen, as I said, that one's really extended at the moment. So we're up at 125 ADR now. Look for a reversal alert. We're extended on the hourly. We're also extended on the 4 hourly. We've got a lovely resistance coming up on this, which is that monthly high, which is a previous area of resistance that we've tested multiple times. 175 ADR. If we get to 175 ADR on that by FOMC and they drop the US dollar, they will rally the yen and that thing will crash. So there's a beautiful entry if it could get there. It's going to take a bit of movement to get it up there, but look at the RSI. You can't quite see, but the RSI there, let me move along a little bit. Similar sort of move. That, yeah, worst case scenario, you just get a pullback from that high, which is 175 ADR. You'll still get that much out of it. Be a good 38 retracement on the move. So watch this there, pullback. But you would be further extended, so you'd be up here. So that's New Zealand dollar yen, and the last one is the New Zealand dollar US dollar, which is an hourly RSI extension. So we're extended above the 70. I'll be looking more for 75 though. But again, anything you take today with the US dollar in it, flip a coin, 7:30, 8 o'clock this evening, you're going to be either massively in drawdown or stopped out, or you're going to be massively in profit. FOMC potentially has got the opportunity to move the market big style this evening. We'll have to wait and see. So the market will move somewhere between 7:45 and 8 o'clock. So we'll get the initial whipsaw at 7 as usual, where we get the Fed fund rate. We'll have the initial statement and projections, and then the Fed will be interrogated at the press conference. And that is where we tend to find out really what they feel. And the market will pay attention to what is said there, listen to clues as to what may be happening in the next quarter. And that's when you tend to get the movement. So in FOMC, if you go and look at previous FOMCs on indices or on any US pair, you usually find a spike followed by a pullback. And then we wait for the press conference. And then during the press conference, you see something like that happen. When the press conference is over, you then either get a rally or you just undo it and we sit back where we started. That's typically what happens. And whether it rallies or not is whether or not the market decides it wants to either buy or sell the US dollar moving forward. If they are undecided, you just tend to get a retracement back to where you were. Very much like we saw today on the pound. Same sort of thing. Yeah, so we just basically dump on the news, hover around and go, are we sure? No, we're not sure. Okay, undo it. Typical news spike. Very, very prominent at the moment as well with the way the market is, the indecision that they've got in everything at the minute. Any suggestions as to the best way to further filter RSI extensions to avoid squeezes, be it indicators, MAs, or fundamental data? There is no way, John. I mean, there is obviously a way. There's any way you like. Just understand that any way you filter anything is only going to be successful some of the time. So you could filter it at support resistance only. So you could say, when I get an RSI extension, I will only take it if we're at a previous area of resistance. So that one there, for example, you could say we're above the 70 level. And when we got to the 70 level, we were at a previous resistance. So I'll take that one. That one, we were at a previous resistance. That worked as well. That one, we're at a previous resistance. Tiny pullback. So that didn't work, did it? There's no way to filter anything. It doesn't matter what you do. You will always get into a squeeze at some point on something. You can't avoid it with position trading. So the only way you can avoid a squeeze is to not to get into anything and stay in it. Get out of it. So there's nothing much you can do. Look at this one here, for example. So this big drop, the RSI extension you could say was there, which is here, at a level of previous support. What happened? Collapsed. So what happens next? You go down to the next level of support. Nothing happened. We push down further to these areas, which is a previous area of support. So that one there, you wouldn't have taken it because it's not an area of support. That one there was not an RSI extension, but it was an area of support where it bounced. You cannot tell. This is the whole point of position trading. If we knew how to filter out squeezes, we would filter out squeezes. If the banks knew when to stop and turn, they would stop and turn. The problem is there's 10 institutions fighting each other and driving this thing up and down, and none of them have got complete control. So you can't use anything reliably. If we could, we wouldn't need to do what we do. We would just get in. We would just say, all right, okay, well, as soon as we get to 150 ADR, 86,685, we'll sell it because it's going to come down from there. If we knew that, that's all we would ever do. But support and resistance is not an exact science, not reliable. That is not a double top or triple top with that. It pushed up a little bit higher, but it didn't quite get to that high. Got a high there, a high there, a high there, a high there, and a high there. Not one of them's in the same place. You could filter out RSI extensions with a moving average. You stick a moving average on this chart at the moment, it will do that. So if you're only going to go long on RSI extensions to the downside because you want to trade in line with the trend, you wouldn't have taken that because it's below the moving average. You wouldn't have taken that because it's below the moving average. You wouldn't have taken that because it's above the moving average. Yeah. I've tried everything. Trust me. You can filter stuff out. On the website, there's a strategy for filtering. So the trend pullback strategy. So this is a variation of mean reversion where you only trade in line with the 24 and 72 moving averages, which are the daily, institutional, monthly, and quarterly moving averages. So you only take RSI extensions to the upside in a downtrend. But you will still get squeezed. Yeah, because when you take that one there and it pushes up to there, what happens next? Potentially that. Because this was the low and we're now changing structure. You will still get squeezed when structure changes. We don't know when structure is going to change. That's the problem. If we knew that, we just literally would always be in the money, wouldn't we? So there are people out there that are in this group that basically don't get into the initial trade signaled. They take the second or third or fourth exit, which means that, for example, in something like CAD Swiss, that was the initial RSI extension signal. Don't take that. Yeah. Measure 3/4 of an ADR away where you would take the second entry typically, and make sure that your first entry is above there. That guarantees that you only get in when I'm in 3 shorts. You're getting in later. But I'm already getting in there. So what you will do is you will miss out on all those beautiful trades I have where I get into 1 or 2 positions and exit. You'd miss all of those. You'd only get into the positions where I get into squeeze. But you would get in with less of them. So I mean, there's just not a filter that you can use that's reliable. If you use a filter to filter out, you will filter out a load of the winning trades. So which ones do you filter out? There is no answer to that question. If we knew it, we'd do it, but we don't. See what I mean? Have you set your RSI to 70/30? I haven't set my RSI to anything. What do you mean? On the dashboard is set to 70/30, 75/25, and 80/20. So it shows you 3 extensions. This is hourly. This is 4 hourly. So it starts measuring at 70/30, 75/25, and 80/20. I take my trades at 75/25 levels. I want to know when it's setting up, getting ready. It would be great if the news didn't cause those drawdown controls on GU. Yeah. Yeah, so I mean, a 4% loss today. Nothing I can do. The news spiked me out, and now I'm well quids in. So I've taken a 4% loss for absolutely no reason. But let me flip that on its head, AZ, right? What if that CPI today had done that and that, and we were sitting down at 250 ADR to the downside because the market had decided that the interest rates are not going to rise tomorrow and we need to be selling the pound? If I hadn't have done that drawdown control, I would be in a much worse position now. If I'd have known that was going to happen, I wouldn't have done those. If I could see into the future, I'd be a multi-billionaire. I'm not. There's nothing you can do about it. It does what it does. We don't complain when we sit here, right, and have 15, 20, 25% profit months, do we? Yeah, as human beings, whenever we're having a bad time, we moan about it. It's just what we do. Yeah, things don't go right all the time. There's nothing you can do about it. But I don't sit here going, I've made 25%. I only sit here and moan and shout when I'm having a bad day. And we only look to rectify problems when things aren't going right. This is exactly why people system hop. Yeah. When things are going bad, you go, this doesn't work. Screw it. I'm out. And you stop and you go and find something else. And then you do that for a couple of months. And then you find out that doesn't work. You do the next thing for a couple of months. You find out that doesn't work. You do the next thing for a couple of months. Find out that doesn't work. Then you end up coming back to the stuff you were at before and say, hang on a minute. What if I did that with that thing that I did before that actually worked okay? I'll do that and I'll try that for a couple of months. That doesn't work. So I'll go over there to something else. That's how you spend your entire life. When you're having bad months and you're losing 4% in a day because there's been a big push down and you've got a big squeeze on that you've been in for 2 months, I look back at the 15 years I've been doing this and go, I know damn well this thing's going to be up at 225 ADR within the next 3 to 4 weeks because I've seen it happen 1,000 times. It's just, I don't know when, but it will. Yeah, you just have to take the losses. Nothing you can do about it. I have losing months. Thankfully, only 1 or 2 a year. But I have them, and I've had them. You go back and look at the YouTube channel for the last 4 years. There's plenty of them in there. Plenty of losing days, plenty of losing months, plenty of losing weeks. But there's also some big weeks in there. This one today, right? Pound US dollar. We're talking about this now while we're on it. I've got 2 aggressive drawdown control positions on this. Before FOMC, I will be putting stop losses on both of these, which could potentially lose me 3% of the account today. If this thing goes like that, I will be banking 9 or 10% today. Yeah, think about it in that way. Yeah, if this rallies up to 225 ADR, I'll be not only rectifying that 4% loss that I've made today, I'll be banking on top of it a big amount of money. Wait, just wait. Every time a news event goes against you, it costs you. Every time a news event goes with you, you make money. It's exactly the same as using a stop loss. Yeah. The news events that don't work using a stop loss stop you out. The news events that do work using a stop loss make you more money than the ones that stop you out. Nothing's different if you think about it. We're just diluting the losses over a period of time rather than taking 1%, 1%, 1% every time we press a button. Still taking the losses, just taking them in a different way. Nothing's changed. We're still trading. We're still losing. We're still winning. We're still doing the same thing. FOMO, holding on too long, cutting too short, all stems from the idea that you think you know what you're doing. Or think you know what you're doing. Think you know what's going to happen next, forgetting that it's a 50-50. Exactly. For me, the EA took a trade on the pound New Zealand. Good. Yeah. Again, you're going to get different results because different brokers are going to give you different prices. You're going to get different RSI readings. Don't forget, the difference between the EA taking a trade is your reading on the RSI being that and my reading on the RSI being that. Yeah, you won't see any difference, but the EA sees a no trade and a yes trade. It can be that tight sometimes. Unfortunately, you just don't get them. But again, and this is the thing. I have people message me going, why did the EA not had it last week? Pound odd. Why did the EA not take a trade there? Look at it. It's gone up. I've lost all that money. If this thing had done that and it had been in drawdown, I wouldn't have heard from that person You only hear when there's a negative. You never hear about positive. What we do, we're human. Difference between brokers, exactly, that's what it is. How about the 4-hour RSI confirmed with 1-hour RSI and then 15-minute reversal? With 4-hour RSI and the hourly RSI are pretty much the same. You won't get an hourly you won't get a 4-hour RSI without an hourly RSI extension. You can't get both. It can't hit the 4-hour RSI without hitting the hourly, because to get to the 4-hour RSI, you need a strong push on an hourly chart. So you will always have these two light up at the same time. Therefore, you're just trading, if you think about it, H4, M15 or H1, M5. Yeah. The fact that these two at the moment don't have those lit up doesn't mean that these two weren't lit up yesterday. They were. It's just that these move faster. So the hourlies get unlit before the 4 hourlies. You'll always get an hourly RSI extension and a 4-hourly RSI extension, which is why I say don't trade all the strategies. Because if you trade H4, M15 and H1, M5 and ADR reversal strategy at the same time, you will get the same trade. So if you look at Aussie dollar Swiss today, Aussie dollar yen today, yeah, what strategy is telling you to go short here? ADR reversal, 4-hour, H4, M5, H4, M15 mean reversion, or H1, M5 mean reversion. It's the same signal, yeah? When you get a reversal alert here, ADR reversal, H4 and H1 are all telling you to go short. Same, it's only one signal, but 3 different strategies telling you to do the same thing. This is why it's dangerous to trade all strategies, because it can be, I mean, it's massively profitable. If you trade all strategies and all strategies have a profitable month, you're going to kill it. You're going to milk it. You're literally going to make 60, 70% profit on your account. If they all go wrong at the same time, this month, potentially, you're going to go into drawdown 3 times bigger than you should do. So as long as you're segregating accounts out for different strategies, you'll be fine. But if you're not doing that, you're going to get stung. So it will always do the same thing. I don't know. I mean, there are occasions where you may get a 4-hour RSI extension without an hourly, but I mean, it's unlikely. If you look at pound odd, yeah, 4-hour RSI extension, yeah, it's not extended on the hourly at the moment, is it? You can see it's 31.18. If you go down to the hourly, though, it was extended, because for it to get down there, the hourly's got to have moved first. Smaller time frames hit RSI before bigger time frames. So you could say I'm only going to get in when they're both lit up, which means the push has usually been stronger. But that's what happens most of the time anyway. So when I was building the market reversal alert CA, I spent a good, I don't know, maybe year and a half developing that and perfecting it and back testing with it using all sorts of indicators, levels, systems, strategies, everything. And there was no combination that was better or worse than anything else. Everything worked and everything failed, because that's how the market is. You will always have every strategy having a win and a failure rate. The thing you've got to stop trying to do is only pick the winners or only pick the losers, because it's fatal. You can't do it. So every time you go, I don't like the look of that one because that's the one that runs. And every time you go, that looks perfect because that's the one that fails. And you end up driving yourself nuts. All you do is you just take everything. And if you don't use a stop, you can't get it wrong. But what you can do is deal with the situation you're in. That's the difference between position trading and stop loss trading. We have an opportunity to get out of a position. That's the difference between hedging and using a stop loss. Yeah. On this Dow, I've got out too soon. I'm going into drawdown on it. But what I can do at any point is hit the sell button and get out of this position. Because I got no stop on it, I'm not going to get, I'm not instantly just going to make a loss and then try again and make a loss and try again and make a loss. I'm waiting. If this pushes out above that high, we need to look at where we're going. Where do you think we might go? Yesterday's high. So if we rally up to 3R, good place to take a short. Yeah, which brings that position's average within reach before FOMC. Exit. Don't take a loss. But the only reason I can do that is because I'm buying myself time. That's what position trading is doing, isn't it? But if you don't do that and you get it wrong, you can't do it forever because you will blow your account. You've got to take the loss. Thankfully, it doesn't happen that often. Where's the pick of the 5 steps of wisdom? Pick, that's on the website. 5 steps to becoming profitable. Conscious incompetence is where most people sit. That's where we all start. We're incompetent. We haven't got a bloody clue what we're doing. And then we realize we haven't got a clue what we're doing. And this is a lot harder than the Lambo guys made it look. I've spent 2 years in this now, and I still can't figure it out. And then you'll come across something that goes, I get it. And then you'll become super cocky. And then you'll get booted back down to there because you got super cocky and realized, actually, no. What was the problem was, you'll fix it. And that's when you move on to autopilot. That bit is typically when people realize they can't control the market. There is no strategy out there that works in the market because the market does what the market wants. That's the eureka moment for most people. That you cannot force the market, and there's nothing you can do every day that is going to be the same. Yeah. So if you have a system or a strategy that you do when certain things happen, as long as you accept that a number of times that's going to fail, you'll be fine. And as long as you repeat that process over and over again, and you don't repeat the ones that make you the most losses, you'll be fine. That's the eureka moment, is realizing that there's nothing on this planet that can force this thing to do what you want it to do. That's all it is. It's very simple. Go and read the PDF if you haven't read it. Hopefully it's a light bulb. Right, we're pulling back on the pound US at the minute off of ADR. Aussie dollar yen RSI extension. Aussie dollar still pushing. We're still sitting up at ADR and RSI. So this pound US dollar, the situation I'm in now, I have an aggressive drawdown control position just under ADR. I have an aggressive drawdown control position down here. So the average of those 2 aggressive positions is just in that propulsion gap. So when we get FOMC coming out, I will need to protect both of these aggressive drawdown control positions. So what I will do is stop loss, break even on that one, and stop loss at 1%. I think I'm going to take more than that. I'm happy to take more than 1% on this. 1.5% on that one and 0.25% on that. So that is a 1.75% risk on those 2 positions. So if we can hover here until FOMC, FOMC has got to move pretty much an ADR to take me out if it has a big, strong rally on the US. If it has a negative reaction to the US on FOMC statement, I can get out of everything. Or I can wait and hope we actually get one of those moves that we used to get in the old days where things actually move off of news. See. But that's 1.5%. That will be something like 4, 5, 6%. Lap of the gods. Down to the banks to decide. Right, that's all I've got for you today. Not making any money today, so it's just one of those days today, unfortunately. NASDAQ didn't take. That was really the only pre-market opening range that made money today. Sod's law. S&P sitting short in profit. Not going anywhere at the moment. Dow, small loss on the Dow, and I've got a floating DD to deal with. So I'm going to watch this up to yesterday's high, which is here, and watch price action at yesterday's high. I will short again at yesterday's high and hope that I can get out of this with a break even before FOMC. Just a word of caution, if you are still in any trades opening range breakout trades when FOMC kicks in, these indices, you probably know, but they go absolutely nuts on FOMC. So you will find these things going super, super, super far. Typically, bullish US, massive move down. Bearish US, massive move up. Yeah, so just bear that in mind if you are in anything. I would always try and protect everything before FOMC, but bear in mind you won't get those stops. If you put a stop there in FOMC and we're down here somewhere and that spike comes in, you will not get that stop loss honored. That stop loss will slip. I've had $100 stop losses on before that have turned into $500 stop outs. So just the best thing to do is be flat, honestly. Yes, you could make an absolute fortune, but you will also get stopped out with a big loss. So don't risk it. Don't risk it for a biscuit, as they say. All right, so that's all I've got for you today. Anybody got anything else I want to look at before I disappear? I'm just going to quickly cover oil again. So we got the rally. So oil has pushed off the back of the inventories. Propulsion gap, add. So this looks like the buy spot, making new highs up to $95 a barrel. But this will also move off of FOMC, so just be careful. Yeah. Okay, I'll leave it there today. I'm going to reset this evening. Fingers crossed tomorrow is a better day. But hopefully FOMC is going to rectify a lot of the positions that I'm in anyway. So we'll see where we go. But I'll be back tomorrow morning, 7:50. We will pick apart what's happened in FOMC. I'll probably put some notes in Telegram as well when it's coming out. So just be careful. Don't try and scalp it. It just very rarely works. Wait until the press conference is over. And if you do get a move in your favor on the dollar, try not to take it off too soon. You will get a 200 ADR move, quite possibly, on FOMC. So bear that in mind when you're looking at your charts. If it's gone up to ADR, that's nothing compared to what you can get off an FOMC. I've seen 300% ADR moves off this. So just bear in mind you can make a lot of money out of it. But also you can lose a lot. So just protect what you've got. Protective stops. Better to be stopped out than to be in drawdown. Yeah. All right, so have a good one. Hopefully it's all profitable for you, and I will be back tomorrow morning, 7:50. If not, tomorrow at 2:20 for the US session again. And yeah, see if we can make some money tomorrow. All right, have a good one. See you later.